Yo, what's up you guys, welcome back to another video. And in today's video we're going to talk about the US CPI that came through lower than expected. This CPI came through as the Dow Jones anticipated, falling by a 0.1% in December, but not enough for the Feds to say, you know what, we will let it go, but we will not let it go. Now, if you're new to the channel, a sub would be appreciated firstly, and also make sure that you head over to the educational section of the channel where you will learn about CPIs and DPIs and all of that stuff, so you can understand exactly what it is that we'll be speaking about here today as well. Now, before we get started, I just have one question. How is all the fundamental pip lords doing? Like, how are you guys doing? Because clearly your buy stop and sell stop trick did not work today. Clearly why everyone is so quiet. You know what's funny is that a lot of people was hyped because a lot of people said, you know what, we're gonna trade the CPI. I had a trade in Euro USD. I closed it at 0.6% because I was not going to hold the trade through the CPI, because my stop loss would have hit clearly if you look at the kind of price action that is available. Now, my question is, all of you traded the CPI with the buy stop and the sell stop. Is yellow alright? Are you guys okay? You know why I ask that? Because this candle here is that candle where you placed your sell stop when the market went down. Probably hit your stop loss, but you know what, if you're not your stop loss, yes, it probably went to go and hit your stop loss, but guess what, if you had no stop loss, you have probably been sold all the way there. Then you had a buy stop, then the market was like, we're gonna go back, so they got the buy stop, all of that orders collected, went up, hit all of that stop losses, activated buy stops, came back, hit that stop losses as well. That's why my question to you is, how are you doing today? Because I know a lot of people are hyped for CPI. He's like, we're going to trade CPI. Everyone gather here. This is the CPI group. If you're not part of the popular kids, you can't sit with the CPI group. My advice to you is, don't trade data before it gets released. Because why? It's better to trade what you know as opposed to what you think you're going to know. When you place a buy stop and you place a sell stop, you don't know which way the market's going to go, so you take a gamble. Now, one thing about the retail traders is they look at this range, right? That's the 1 minute range where I told you it's going to buy this fundamental pip lord. And you guys can say about these people whatever you want to, but you know what? Nothing feels good than making $100 on a single trade. But $100 is not going to change your life, because why? This is where we are. There was no way you could close this position. This sell stop act, like you could have, no way. This is a 1 minute candle. Your broker would have like, no ways. So if you guys are not doing okay, then I hope you guys feel better in the long run, and I hope you learn from your mistakes there as well. But if you are still holding any sells, there's a correction coming before the next continuation to the downside. Now, without any further ado, ladies and gentlemen, let's jump straight into it. Now, it says here the consumer price index, which is the CPI, which is an indicator used to measure inflation. If anybody told you they knew what was going to happen, guys, when it comes to fundamental data, now when it comes to price action and technical analysis, it's easy to say that I told you the market was going to reject from this level, because that's how price action works. But nobody can tell you, I knew that the Feds were going to do this. I knew there's no way. When you say you know, that means you have factual information. Where is your factual information to say that you don't know? That is why you wait for the data to be released, and then you trade it. Now we've got the data, so now we're going to trade it. You understand? It says here the consumer price index fell to 0.1% last year in December, because we're looking at December's report, meeting expectations for the biggest drop since April 2020. which is weird because that's when everything started. You guys remember in April 2020, this is when COVID came. It was like COVID came, and that's when everything started to pick, kind of when the economy started opening. It says here, excluding food and energy, which is the core CPI, okay? You get the CPI, then you get the core CPI. The core CPI excludes costs, foods, and energy. That went up to 0.3%, also in line with estimates. On an annual basis, headline CPI rose to 6.5%, while core increased to 5.7%. The biggest reason for the easing, I would like to know what that is, came from a sharp drop in gas prices, which are now lower on a year over year, which is yo basis, which is good because that's good news for us across the world. Well, mostly for us in South Africa. That means we expect a lower fuel price, but we're probably not going to get that because we have 4 hours of load shedding per day. So if you don't know what load shedding is, if you ever think of coming to South Africa, I'd suggest you don't come now, because here in this country they put the power off for 4 hours up to 6-8 hours a day. So if you can live without power, you're more than happy to come here. It says here, inflation closed out 2022, and this is what's so funny about this, right? They remind me of these ads, these sponsored ads that runs on Instagram when you have nothing to do and you scroll through there. They say it closed out in a model, like they make it look so beautiful. Like, let's forget about everything that happened and let's just talk about the most recent report, with consumer prices in December posting their biggest monthly decline. The reason why it's declining is because people are indebted or in debt. You make that decision in the comments. So of course it's going to drop. People are being piled with debt, and unfortunately we are getting to that level now. It says here the consumer price index, which measures the cost of a broad basket of goods and services, fell to 0.1% for the month, in line with the Dow Jones estimates. Now, I've made a couple of videos on the CPI. You're more than happy to go over that and see what that is about. Give you a more detailed explanation in terms of what the CPI reading is as well. Now, here is a pro version. It says here, the markets don't believe the Fed when it comes to where rates are headed. That would be interesting, but we know now that the Feds are less likely to be as aggressive with the interest rate hikes, now that there is some sort of indication that the CPI is coming lower. Now you can see here, we started back in 2022. We went from 8.6, remember when we were at the peak, the highest that it's been in the last 40 years, and then we saw a little bit of a dip to 8.2, and then I think we went to 8.7 there, went to 9% at one point, and then kind of, September, October, November, we started to see that decline taking place, which is good to see, but it's all about maintaining that now as well. It says here, inflation is quickly moderating. Obviously, it's still painfully high, but it's quickly moving. And it's funny, though, that between June and December, the CPI dropped with at least 2.5%, while the inflation dropped with a 2.5%, which is quite fast, but it's in line with what the Feds are expecting. But that does not mean the Feds is going to stop hiking those interest rates. Now, unfortunately, not good news for the dollar index in the long term. Maybe in the short term, a slight bullish correction is expected, but other than that, it's going to be a bloodbath for the dollar index as we move along, because the dollar, has to give up some of the gains. If you guys remember the video I did on Monday, where I said that, where I expect the DXY to pull back to at least this level over here, and this is exactly what we are going to see in there as well. Now let's just jump straight into the technical information, also looking at what we can expect going into next week. We got some PPI indexes coming through there as well. We got some retail sales, and then the rest of the week, next week is actually a very good week to trade, because there's not a lot going on there next week also. Now if you look at the technical side here as well, now if you ask me, I would say that the dollar is still due for a correction before continuation to the downside, and I would basically spot that. And I'm not going to, let me just do that. And so if you look at the monthly time frame, firstly, we had this massive impulse. So after an impulse, you normally expect a correction. That correction is expected to at least the 0.382. And if you look at the 0.382 and you look left, you can see we almost have this level over here lining up perfectly with the structure, acted as support, resistance, got broken, support. So I do expect a correction at least for the DXY before a move to the downside, because most pairs currently trading against the dollar index, including metals that are negatively correlated, and indices and commodities, they are all overextended to the upside. So I do expect a correction to at least this level. However, it is important to keep in mind that the dollar index is currently in bearish territory, and we all can also see that the dollar had just hit a very important structural level there as well. Now if we go zoom in closer, this is more or less where I do expect the dollar to just pull back to, around that level. Smart money concept traders would say to fill in the imbalance, but we're just going to talk about the price action that we see over here as well. Zooming in here, you can see the market printed support, and once support gets broken, we need to wait for a clear break above this level. This would then confirm the market to give us the rally to the upside, probably up until there. Now if you sitting there and thinking, but you're saying that the dollar is about to get weak, so why are you looking for buys? The thing is, fundamental data is driven by the long-term momentum, not the short-term momentum. And also, it's now all about profit taking, and not profit taking on the dollar, but the dollar is at the good price for investors to say, you know what, we're more than happy to buy it at this price. For everyone who bought gold and the euro when it was doing good, those people are now closing that position. So basically taking their profits. If you need a more detailed information on that, you're more than happy to look at the COT data, which is the commitment of traders, which tells you what the biggest speculator positions are in the market as well. Next up, we've got the Nasdaq 100. Now the Nasdaq 100, because we expect the return on the dollar index, the Nasdaq is currently trading in bearish territory as well. If you remember, the market was trading at this level, and I explained all of the reasons why I expected the market to go and do that pullback and then continue to the upside to complete a W formation. We now broke below strong support, and now the market's back to test it as resistance. Due to the slight bullish correction on the dollar index, I do expect a slightly deeper correction for the Nasdaq, and then potentially continue higher there as well, coming to test this previous level of support that is now acting as resistance that got broken, that is now acting as a level of support. Okay, next up we've got Euro USD. Euro USD also hit a weekly structural high, as you can see over here. Market rejected it before, and also we can see this, all of these weak conditions that we had over there. I do expect this week to still close below this structure over here, so there is no, I said now, there's no way this candle is going to close above that level. If it does, then I'm not there. I'm going to stop trading and become like everyone else and just become good at marketing. So yeah, on the weekly time frame, on the monthly, we had this massive impulse. Again, I'm not going to measure that correction, but I do expect a pullback to at least this level over there. That's more or less where I would say give us a pullback, just give us a pullback till there. Now here on the daily time frame, you can see exactly this is what I've been speaking about, this level over here, very important level. The first time the market's back to test it at that level. Now in the short term, I do expect a correction. Once again, the market broke above this very strong level of resistance, and we know when the resistance gets broken, becomes support. The market also printed a massive impulse. After an impulse, you expect a correction, and the best way to measure that is by taking your Fibonacci from the low to the high, and you can see it. This is how beautiful. It's all orchestrated, eh? Like the UEFA Champions League song, which I should not be talking about because my team is not in there. So 0.32 lining up perfectly. I do expect a pullback on Euro USD, and then from there we can talk again in terms of what it is that we are going to expect. But I do just say, just sit a bit keep your hand, just sit a little bit on your hands. Firstly, there's a little bit of clearance, but this for me, just a close below that level and we're all good to go. And next up, we've got gold that was wiping liquidity to the up and downside today. Also, just a correction expected. Gold is currently trading at an all-time high. Just joking. Gold actually went and hit this level. The last time it was here was just over a year ago. So I do expect like a nice correction on gold. But we know that there's a slight correction expected on the dollar index. Again, SMC traders would say we've got this imbalance. So basically, imbalance is where the market broke resistance. We never came back to test support. So basically, it's just like before it got there. Sorry. So just before it got there, it's just like reversed. So the market needs to complete the imbalance or whatever. Sorry, I don't trade that stuff, so I won't know. But I do expect the market to come and test this previous level of resistance that is now acting as a level of support. And then from there, obviously continue higher. Now, guys, that is it from my side. And if there's one thing that you can learn from what I said here today, it is do not trade the news. Right. So, before I go, I just want to inform you guys about the accounts that I do pass, because I have added more now. So I can currently do next step funding, smart prop trader, first class forex funds, the funded trader, level up, and also FXM also. So those are the companies that I can do. You're more than happy to just email funded at thewealthcreatives.com there as well. Guys, that is it from my side. I want to say thank you so much for your time. Thank you for everything. And as always, cheers for ears.